But with that, we'll move on because this is the global market action. How will these overnight cues impact our own markets? We have our research team joining with just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Hi, thanks for that, Sonal. Well, yes, on Friday's trading session, the markets did record what was the biggest single-day fall in 2 months as HDFC stocks fell sharply. There was the MSCI rejig news, which led to around a fall of 6% each for both the twins, which was the biggest that we've seen in the past 3 years. But overnight, or rather over the weekend, we've seen the Dow jump 500 points as regional banks and Apple shares surged on Friday's trading session. And you were talking about the April jobs data, which was better than expected. So the US economy is still doing well despite 13 rate hikes which have come through. So the US economy added 2.53 lakh jobs. The street was anticipating anywhere between 1.5 to even 1.8 lakh jobs in terms of an addition. But the likes of Goldman Sachs have said that they expect a pause from the Fed irrespective in June, despite the strong jobs data, simply because of the number of rate hikes which have already taken place. Asia is currently mixed, as you mentioned. We have SGX, however, which is indicating a bit of a positive start. Now, Brent crude is the other factor to watch out for because it closed around 5% lower last week. It was the third straight negative week for Brent crude. Now, on a larger scale, what we need to watch out for was that despite Friday being a negative session for us, 35 of 50 Nifty stocks recorded gains last week on a week-to-date basis. The likes of Maruti, Asian Paints, Titan, they all were top gainers. FIIs have been net buyers throughout last week, and that gives you an indication in terms of the inherent strength or the underlying strength that we're seeing in terms of participation at this point in time. Earnings-wise, we have the likes of UPL, Canara Bank, Exide, Happiest Minds, Pidilite, Mahanagar Gas, all of these stocks to watch out for in trade today.
That is a long list, so we'll continue that, Ekta. Thank you so much for that, and go across to Surbi, who will list out the other stocks we'll be watching out for in today's trading session. Hey Surbi, good morning.
Hi, good morning. Thanks for that. So quite a few results to track which have come over the weekend. Let's start with Coal India first. When the revenue was better than the poll, it came in at 38,152 crores, but margins were compressed due to higher wages. Margins came in at 18% versus a poll of 35%. Next is Marico. The numbers were pretty much in line. Revenue came in at 2240, margins came in at 17.5%, and PAT came in at 305 crores versus a poll of 284. Britannia, it was a solid set. Revenue came in at 4,023 crores, margins close to 20% versus a poll of 17.5%, and PAT at 557 crores. Next is Paytm. The total income was up 50%. It reported an EBITDA positive of 234 crores versus an EBITDA loss of 368 crores same time last year, and the net loss has declined to 168 crores versus 763 crores same time last year. And lastly, Alembic, the numbers were marginally better than estimates. The US continues to be weak, down 18% sequentially. The revenue was flat versus an estimate of a decline of 4%, and margins were pretty much in line, came in at 15%.
Surbi, thank you so much. So all those stocks will be in focus today. Let me go across to Mangalam now, joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So, there was a near 200-point decline on Friday on our indices, and all of that, nearly all of that was contributed by from the HDFC twins itself. How does that stack up with regards to the flows? HDFC twins together saw delivery selling worth nearly 4,500 crore rupees. So that is something that, reflected in the institutional volumes as well. The FIs, while they bought about 778 crores in the cash market, the domestic institutional investors sold about 2,200 crores. The FIs, while they've been buying in cash market for the last few trading sessions, they also hedged their positions by selling about 800 crores in index futures, added about 10,000 short contracts, as a result of which their longs are around 45%. But the big data point on Friday was the action that we saw in index options. The data suggested nearly 20,000 crore worth buying in index options. And now while there was purchase of close to 5 lakh call contracts and 2 lakh put contracts, there was 4 lakh calls written. That's nearly, 4 times the calls written for puts written. And that's telling you that at higher levels, we will face a fair amount of resistance. What are those higher levels? The SGX Nifty is indicating a positive start. Does that mean that we see a big, up move thereafter? Perhaps not, because 18,200 has nearly 1.2 crore shares outstanding. So that is something we'll be watching out for. A lot of writing seen out there for a premium of 44, 45 odd rupees, telling you 18,200 to 18,250 will see some resistance. 18,100 call writers were pretty active as well for a premium of 85 rupees. So as soon as we cross that 18,150 mark, we may see some resistance. However, at the lower levels, 18,050 to 18,000 are important support zones because that's where the put writers are active for a premium of 90 odd rupees. So short point, 18,000 to 18,050 is a support, 18,200 to 18,250 is a resistance, and the Nifty put call ratio, which was at higher levels at 1.35 in the previous trading session, has now moderated to 0.85. Remember, when it goes below 0.7 is where we start seeing oversold conditions in the market.
Okay, take that point. Thank you, Mangalam, Surbhi and Ekta, for joining us, prepping us up for this trading day ahead. We'll step into a break now, and up next we review quarterly earnings coming in from Coal India, Marico and Britannia as well. Stay tuned.